Hi, David Bassanese here, Chief Economist at BetaShares. This is a snapshot of my market trends report. And really the month that we've just gone through in July was a pretty good one. We had both equities and bonds producing some positive returns. After, most of this year we've had pretty weak returns in both asset classes. So global bonds are up 2.5%. And really on the back of declining bond yields, we saw US 10-year bond yields, for example, decline from around 3% at the end of June to 2.65% at the end of July. And what we're seeing is markets they're noticing that global growth is starting to slow under the impact of higher interest rates, and also lowering the expected peak in the official interest rates by central banks such as the Federal Reserve, and also starting to price in potential rate cuts in the second half of 2023. Now, equity markets also enjoyed the decline in bond yields, so we saw global equity returns up 7.1% in the month. At the same time, I do note that earnings were actually pretty flat over the month, so all of that rebound in the equity market was on the back of the price to earnings ratio bouncing back. In terms of major themes in markets at the moment, what we are seeing is that the decline in bond yields, the increase in concerns with regard to global growth is seeing an unwinding of the outperformance of the commodity, energy, value parts of the market, which did so well in the first half of the year. At the same time, the underperformance of growth and technology areas that have been hurt by rising bond yields, that underperformance is starting to level out. So I think going forward, what we may well see is the value resource parts of the market likely to remain under pressure if we do see further slowing in global growth and further, I think, weakness of equity markets, because ultimately, yes, the bounce that we did see in July was good, but what we are facing is a slower global growth environment and potential recession in the US. So equity markets may well continue to go lower, which are going to hurt those parts of the market. In terms of the bond market, I think the peak in bond yields does clearly seem to be in. It happened a few months ago, on the view that global growth is going to continue to slow, and the US may well need to go into recession to get inflation under control. I think bond yields are likely to remain on a downward path from here, and bonds outperform cash. That's it from me for this month. Thanks for watching, and if you'd like to see the full report for market trends, please visit the Insights section of our website.